Welcome to the Investors Trading Academy event of the week. Each week our staff of analysts and educators tries to provide you a better understanding of a major market event scheduled soon, and that will have an effect on global markets. October is often the most volatile month for US stock prices. The reason why that's the case is because the fourth quarter earnings season, which begins each year in the second week of October, is the time that publicly traded US firms announce if they are doing better or worse than expected for the year. It's called the October effect, and from the data we have at this point of time, it looks like 2015 will be a year in which the market may be prone to crashing during the month. While the longer-term stock trend can be attributed to expectations for future earnings, the initial reaction to each report is usually caused by whether the company met, missed or beat analyst expectations for the last quarter's actual performance. Analysts change their estimates for actual performance over time, and we can track those changes for the market averages as well as individual stocks. It's not surprising that third quarter earnings estimates have dropped from the 3.1% decline in July to a 5.8% descent in September. That is nearly twice as bad as analysts had originally expected. On the bright side, this means that the bar has been lowered and actual earnings may have an easier time beating estimates on average, which may keep investor sentiment positive. That is usually what happens in this situation. However, if companies aren't able to beat the already sandbagged earnings estimates, the shift in sentiment could be quite dramatic. With just a $12 billion market capitalization, metals specialist Alcoa seems like an unlikely candidate for the focal point of earnings season each quarter. Yet tradition carries a lot of weight on Wall Street, and for years the metal maker's early reporting data has given Alcoa the role of leading market analysts into a new quarter. With Alcoa set to report on October 8th, many investors see the company's anticipated slowdown in revenue and earnings as a signal for what's likely to be another quarter of weak results market-wide. But the earnings season has gotten underway with results from 15 S&P 500 members already out. These early reporters include such industry leaders as Nike, FedEx and others. All of them have fiscal quarters ending in August, which we can count as part of our 2015 Q3 tally. We have more reports on deck this week, with a total of 20 companies reporting results, including 4 S&P 500 members. Apple Inc. is estimated to report earnings on the 19th of October. The upcoming earnings date is derived from an algorithm based on the company's historical reporting dates. According to Zacks Investment Research, based on 16 analyst forecasts, the consensus EPS forecast for the quarter is $1.87. The reported EPS for the same quarter last year was $1.42.